Hi, welcome back. Contract specification has been covered in the previous chapters and in previous videos. What we'll quickly do here is basically recap all the terms so that they are fresh in your memory. Let's just have a look at the terms that keep coming up under for the contract specification of currency futures. Let me start by writing down about the underlying. Now, what is the underlying? We've already covered what the underlying is. In our case, we are looking at, if you remember, the rate of exchange. So, rate of exchange is the underlying in the case of currency futures, and between, let's say, 1 USD INR, 1 USD and INR. So that becomes the underlying. Second thing, the contract size. So the contract size, I am quite sure you remember, is nothing but 1000 USD. So that becomes the contract size. We can also have a look at the tick size. The tick size is nothing but rupee 0.0025. I'm quite sure you remember this because we've done a lot of questions on tick size as well in the previous videos, just recapturing and reminding you. The price bands. Something very interesting on price bands, they do not exist, right? So we'll just put across there. Let's have a look at the trading cycle. I'm quite sure you remember that under the trading cycle, in this USD currency derivatives, we follow a 1 year trading cycle, which means 12 months. Very important concept, please remember it. Let's have a look at the expiry day. What was the expiry day? I am quite sure you remember. Expiry day was the last working day. Last working day. So whenever I'm saying working, I put a W, which means please remember it's the last working day. So if it's a Sunday or a public holiday, that does not count as a last working day. It will be 1 day prior to that. Let's also have a look at the last trading day. The last trading day, I'm quite sure you remember, is 2 days prior to the last working day. So which I say 2 DPW. It's 2 days prior to the last working day, right? Let's have a look further and let's have a look at the settlement basis. What does the settlement mean? Okay, on a daily basis, there's a mark to market which is going on. So mark to market is always T+1 settled. That means, if it's happening on Tuesday, it'll be settled by Wednesday, and the final settlement is T+2 basis. So the final settlement will always be T+2 basis, right? When we're talking about settlement basis, we can also talk about the settlement price. Now, what is the settlement price? For the MTM, the settlement price is the closing price of the futures contract. So MTM is the closing price of futures contract. And do you remember what's the final settlement price? It is the RBI reference rate, which is the, let me put it here, final settlement price, right? So RBI reference rate is the final settlement price, and the settlement basis, which is the final, is always T+2, which we've mentioned earlier on point number 8. Okay, so let's just have a look at the final settlement date. The final settlement day, I mean, you don't need to be Einstein to figure this out. This is the last working day. It is the last working day, and again the emphasis is on working, please remember, right? So what we've just basically done is recaptured all the specifications that were mentioned. We've seen underlying, we've seen the contract size, and we've gone till final settlement day. Let's carry on with our studies.